Okay, so we're gonna start. Let's put our heads down right now. So for a back pattern, all we want to see is we want to see an M or a W that has the second part of it within the first part. An M or W that has the first part of it within the first part. The second part of it within the first part. What do I mean by that? This is what I'm trying to say. Let's get some blue on. Okay, so it's going to be something like that. And something like that. Come on. So we want this second part to be within this first part. Hope that makes sense.
Yes.
This is the type of thing that we want to see.
No. The first part to be in
No.
the second part?
First part and the second part. So we want this
okay.
part to be inside the first part.
The bottoms, okay.
If you were below, you would be wrong. You want it
like a cipher.
Oh.
So we want something like that. Right? In this case, we want the second part to be inside the first part. Like the cipher, the second part was outside. So this is what I mean by after you've managed to learn all the patterns, believe me, you're going to start seeing harmonic patterns everywhere, different sort of harmonic patterns everywhere. But for now, we're going to take it easy, learn it bit by bit until we get to the point that we can see all of them anyhow, anytime, any time frame, and trade it with confidence. So yeah, that's just the beginning of how to identify a back pattern in the market. However, the only trick to it is we want this B part. Okay, let's label them. Here being your X, here being your A, here being your B, being your C, there being your D. So now let's put some flesh on. The retracement we want from X, A, giving us B, is we want 50%. So X plus A, we want what? 50%. Where's my plus on my keyboard? I'm going a little blind. Sorry, guys. That will be equal to 50%. So we want 50% on the fib. X plus A, 50%. That's what we're looking for. What am I doing? What am I doing? Yeah. Okay. So if you pull your fib, what do I mean by that? If you pull your fib from the X level to the A level, we want B to be minimum 50% for a back pattern. We want the B to be a minimum 50% for a back pattern. I hope that makes sense.
And the max is 50% as well.
Sorry?
And the max is 50% as well.
The max, we want to go as close as possible to 61. It doesn't matter, but we don't want to touch the 61%.
Okay.
If
so
we
it should be between 50 and 61.
That's it, between that. Okay. If we go past the 61%, it's no more a back pattern.
Okay.
We'll be looking at another harmonic pattern altogether. So for the first part of it, you need this area to be between, let's do it between ETW, not by the way, between 50 to 60. I'm making it a lot easier this time around, putting the notes on. I'm not going to move my fib. The same fib that you pulled, I want you to mark the 88.6 area. The same fib that you pulled, I want you to mark the 88.6 area. What do I mean by that? That is going to be your D. I'm making it as simple as possible. If you go on Ray's session, he's going to fib it differently and show you the difference of it. But you, on here, I am going to make it as easy as possible. All you need to do is pull just one fib, or maybe two, and that's it. You're done. So now we know X, we know A, we know B, and we know D. How do we find C? We're going to take this fib off. And C is going to be from A to B. We need a minimum retracement of 50%. So everywhere below this 50% is accepted. A minimum of 50%. So everywhere below here is okay. Even up until the 100% is still okay. Immediately it goes past 100%, it's no more a back pattern. Is that clear? So we're going to want something like that. A plus B. A plus B will be equal to 50% and above. %50 and above, but not more than 100%. If we go past the 100%, what have I done? 50% and above, but not, yeah, 50% and above, but not more than 100%. If we go past the 100%, it's something else. We're not looking at the back pattern anymore. I hope that makes sense. Is everybody understanding it? Give me a 1 in the chat box if you understand.
But not more than 100%, because it
Yes.
says 50 and above, but more 100%.
Oh, what
Is
about
that including the wicks as well? The wicks are not to go over 100%.
Yes, including the wicks. We don't want the wicks to go past 100%. More than.
Okay, you need to put a knot in there.
Oh, what have I done? Not more than, but not. Okay, yeah, I found it now. But not more than. All right, so this is what we want for this fib level. If we pull our fib from A to B, we want C to be 50% and above, but not more than 100%, including wicks. Right?
Mm-hmm.
If the wicks go past the A level, that's it. We no more have a back pattern. So now, guys, we have X to A equals B between 50 and 60%. A to B equals C equals 50% and above, but not more than 100%. We already know our D from pulling the fib from the X level to the A level. Does that make sense? 2 in the chat box, if that makes sense, guys.
So the fib retracement should be at 1 to 1 when it comes to C.
When it comes to C.
Yeah, the fib retracement should be at 1.1. I can't read it properly. 1.13, 136, 867.
No, not just that. All we need is if you pull the fib from here,
yeah, from A
here to the B, we need anywhere below the 50%.
Okay, got ya.
Anywhere below the 50%. I have managed to trade back pattern to understand that I can see with my eyes. I know which retracement will be 50% and above and which retracement will not be. So usually I only pull just one fib and I can tell you what pattern is. Immediately I know what B is. I can already tell you this is a back pattern. This is a Gatly pattern. This is that pattern. But yeah, for a start, I would say always try and fib the A to B to make sure that your C is 50% and above, but not more than 100%. And your D, just like I said, you're always going to know the D from the same fib that you pulled from X to A. Giving you the B will also give you the D. Your B would be between 50 and 60, and your D will be 88.6. I hope that makes sense, guys.
Yeah.
Fab. So now all you're going to do is you're going to take your A, B, C, D pattern, and you're going to start from the X to A, to B, to C, and to D. Does that look like a harmonic pattern right there?
Yes.
Yep.
That look like a harmonic pattern.
You know the numbers between A and C, X and D, and X and B, B and D.
Yep.
Is that a range that should match up to the fib retracement numbers as well?
It should, kind of. Because if you look around this area, 88.2, this is 88.6. So almost the same area, right? This area, we fibbed it. It was around 50-something%, right? And you can see we have that measurement right there.
Yeah.
This area, when we did the fib from A to B, it was around 70-something. And look at that. So they match up without even pulling the fib. We can clearly see what this harmonic pattern is trying to tell you for a back pattern.
Yeah.
Right? So for me, if you mark up a chart and you send it to me, Francis, can you check if it is this, if this is correct? I don't need to go on my chart to know that that's correct. All I'm going to do is I'm going to watch this area, watch that area, and watch this area.
Yeah, thought so.
If they don't match up to the pattern that you're talking about, I'll just tell you straight away, no, it don't look good. If it is all right, all I'll say is that looks good, ready to go. That sort of thing. That is all we do about the back pattern. Is it easy? Is it easy? Give me a 3 in the chat box if you feel this is easy to actually draw. See, yes, I guess that is already there. Jacob.
No, I'm not already there.
I know Jacob has been drawing back patterns for a while. So
when you bring the chart in play, then it becomes a whole different thing.
Believe me, it's not going to be any different if we go on the chart. It's still going to be to be considered Pammy. We shall see. We shall see when we go on the chart. When we go on the chart, we should see. Does anybody want to take a picture of this? A screenshot of this? Do you want me to consider and confirm? All right. Okay. So does anybody want me to take a screenshot of what I've just done right now?
Yes, please.
Yeah.
I've got it, but just in case.
So I'm going to take the screenshot. You can add it to your notes. I'm going to put in the group chat right now.
Yeah.
I'll also put in the group chat for the WhatsApp for anybody who's not here. Yeah. So now we have it on record. I can happily delete everything. And let's go on the chat and see if we can find something like that. All I was trying to say is X to A to B, B to C, and C to D. This is the picture that I wanted to see if you go on the chat. Can you see that? This is the picture that I want you to see when you go on the chat if you want to find a back pattern. Before you even put the fib on to know whether it's a back pattern or is another pattern that you see in. So right now, I'm going to put the fib on and see if this is a back pattern right there. So if I put my fib right from the top to the bottom, do we have 50% for the B leg?
Under 61, yes. Just
It is
about.
under 61, but let's see if it is really 61. So do make good use of the zoom tool.
Yeah, okay. Oof, that was
to
fun.
make sure that it is really within the system giving you a back pattern, or is above it. Always do make sure, hence why I am very surgical when it comes to that. I am going to pull my zoom and make sure that I know exactly what is happening in that area. And you can clearly see we missed the 61 just by a little. All right, it might be our mistake. It might be our fault that it's not really up to the level. So what we do is I am going to zoom in everywhere to make sure that my fibs are aligned and in the perfect areas. Now let's do this bit. Now let's go back to the middle to see if we are past the 50% and on the 61. Can we confirm that we're still about there? We're still below the 61.8.
Yes.
Fab. So that is all we need to confirm. Now we have a potential back pattern that we could trade off from. Now, what are we going to do next? We're going to mark our 88.6 level for our D, right? So what do we have? We have our X, we have our A, we have our B. Now, what do we find next? The C, right? I'm going to take this fib off. And I'm going to fib from here to there, to the B. Do I have more than 50% and below? So 50%, 61.8, 71 level, price was able to reach it before it started climbing up. So now we have the confirmation of X, A, B, C. So all we need is for price to get to the D level, then we can start selling, right? So this is how your pattern is going to look like from X to A to B to the C and now to the D. So usually you see in the group chart, I will mark up a chart and I've already identified the pattern, but price has not reached there yet. This is how I do it. I hope that's clear. Give me one in the chat box if that is clear, if that is so simple to identify. Yeah, we're reaching somewhere. No, I have 15 people on the call. I need everybody to give me that one, please. If not, I am happy to go over it again. I'm waiting for the rest. Yeah, Lloyd. Okay, how long do you wait until it's no longer a butt pattern? There may be pattern within a pattern. Of course, there may be pattern within a pattern, and all the time is up to you to actually look for it and make sure that there is a pattern within a pattern. If there is none, then yeah, you're happy to trade it. Yeah, I've got Stacy, I've got Galaxy Tab, I've got Phil. Yes, thank you very much. But yeah, how long will I know that this is no more a butt pattern, right? If price never gets to this area, it's not a butt pattern. If price never gets to that point, the D area that you have marked, it's not a butt pattern. When price manages to get to this area, then you can say, yes, my butt pattern is complete. Then you'll be happy to take that setup. I hope that's clear, guys. So this is a live markup that I've actually done just to give you the view of it. Usually I do it and then I use old chart and people can't really see what I've done. How they are going to be able to trade it on a live session if they really want to find the patterns for themselves. But here's the case. On today's session, I've actually used a live one. It gives you a reason. It gives you the clear vision as to how and what I look for when I want to trade the back pattern. That's just it. I hope that's really clear, guys. I hope that's really clear. Yes, I've got all my ones. Now I'm happy to move on. Let's go on the charts. Let's see if I think we traded one in a week. We saw a back pattern somewhere. Oh, there he is. There he is. NZD card. That was on the 15 minutes time frame. So let's go on NZD card. So guys, this is what I saw on I think it was on Friday. This is what I saw on Friday. So I called this trade as a back pattern, and the reason was I fibbed from here X to A, and I saw that I have 50% sitting in this area. Anybody agree with me? Give me a 2 in the chat box if you agree with me. Give me a 2 in the chat box if you agree with me. Yay, the 2s are coming. Happy days. So now the next level that I'm gonna mark is at 88.6. Right there. 88.6 for our completion. And now we're gonna take this one off. We're gonna pull the fib from A to B. Do we have 50% and below? In the chat box, do we have 50% and below? Yes, that's it, that's it, that's it, that's it. So what next? What do? We have our pattern confirmed. All we do is we take our ABC pattern right from there. X to A to B, B to C, and C to D. Once price hit this area, we're looking to sell. Where is our TPs gonna be? We're gonna fit from C to D, and our TP1 is gonna be the 38.2, and our TP2 is gonna be 61.8. At TP3, we're going to look around to see if we have any sort of equal low. Sorry, guys. We're going to look around to see if we have any sort of equal lows around here. And we can actually see from here that we have some sort of equal low. This area, we have some sort of equal low sitting down here, right? So it means that we have some sort of liquidity build up in this area. So potentially, we could hit TP1, TP2, and potentially get our TP3. And if I actually pull this fib from here to here, we could potentially end up having a cipher pattern. How were you able to see the liquidity? Thank you. How were you able to see the liquidity? All I'm trying to see from here is equal bottoms, double bottoms, and triple bottoms, whatever it is. So if you look around this area, can you see that this price area is that one? What can I use to identify them? This one right here and that one right here, they're kind of lining up. So what were the TP levels again? All right, the TP levels was a fib retracement pulled from C to D. 38.2 is TP1 and 61.8 is TP2. I hope that's clear, Pami. All right, let's finish the liquidity. Double bottom double top. So you can see from this area, there is some sort of, it's sort of double top, but it's not really. We can't have it all perfect, but we can see that price was here. The reason behind this is when price got here, retail traders were taking advantage to sell, right? They see this area as a support. So they see this area as a support, right? If I put line there, you can clearly see around there that price tested it here and it dropped. Price tested it here, it dropped. It went above it, retested and went up again. It broke it, retested and dropped. And it came back to retest it again and drop. So all it has created is some sort of liquidity buildup. So everybody who was trying to sell from here have their stop loss above that area. I hope that's clear, Sister T. Thank you very much.
So the price above the support, sorry, the actions above the support, that's where the liquidity took place, where your X is?
Absolutely.
Okay.
It means that everybody that plays the sell in that area has got the stop loss or protection above that area. So you sell around here, you're definitely going to put your stop loss above this highs, right? Above this area. And that is exactly what smart money don't like. So potentially this back pattern we have here has the potential of actually coming higher to this area to take this liquidity and then it will drop. Hence why sometimes I mark up a chart and then I don't put stop loss. If I see there is liquidity right here, I'm going to mark it and I'm not going to put any stop loss. The reason is I'm leaving room for smart money to do whatever they want to do. And still, once they do it with the harmonic pattern completion, I know that it's still going to sell. I hope that's clear, guys. How do you decide to go through to TP2, then TP3? Okay. TP2, most of the time, I do go for TP2. Thank you, Augustine. Augusta, sorry. And most of the time, I do go to TP. Brilliant, love this. Thank you, Stacey. Most of the time, I do go to TP2. And the reason why I do go to TP2 is I look around to see some sort of imbalances around those areas. Can we confirm that this is an imbalance? We're not just harmonic traders. We are smart money traders as well. So we are aware of imbalances and we are aware of institutional candlesticks, aren't we? Give me a 1 in the chat box if you know what I'm talking about. Thank you. Thank you, everybody. So that's it. So we know that this is a sort of imbalance right here, right? If you go below that, you can see there is another sort of imbalance there, right? An imbalance sitting right here. So if I am a trader seeing this sort of imbalances in this area, I am happy to take price all the way down to TP2 comfortably. Why? Because if you look at this range, the price range from here is the same move that is going to finish off our D pattern, right? With this imbalances here. If price should retrace, I want to see a retracement within this move. If the retracement go past this area, then it means that the trend has changed to the downside. So now I can continue to hold my trade for TP3, which is the liquidity buildup down here. I hope that's clear. Many things. I think she's already got it. Right? So once price breaks this pivot low, this is the last low that created the high top. So what minimum time frame chart would you search imbalances? Okay, for accuracy for my price, I am always going to go as low as the 5 minutes. Sometimes I do go even on the 1 minute. I do go on the 1 minute to make sure that I have the clear imbalance to play off, especially when I want to trade, when I want to have a setup right there. So if you look about this area, what do we have right here? An imbalance, an institutional candlestick right at the area where we're expecting price to finish up the D pattern, right? So for me, once price gets to this area, I am happy to take this trade. The reason is I have the imbalance, I have the institutional candlestick. Even though there is liquidity build up right here, what I do know is market structure has been broken right here. We broke this market structure. This market structure got broken by this one, and this one got broken by that one. So if we play off this area, then we have the potential of actually breaking this market structure right here and clearing this liquidity. I hope that makes sense, guys. So I am happy to actually take the trade, twin trade it, one trade for TP1, and then the other trade, I am going to leave it in for any sort of potential of reaching even up until TP3, which is this area.
So when you're twin trading, one trade to TP1,
Yeah.
the second trade, once it gets to TP1, you put the stop loss back to the TP of TP1 and let it ride, right?
Once I'm in TP1, once the trade hit TP1, I am going to move my stop loss all the way into 10 pips profit, or maybe 20 pips profit, depending on what time frame I'm trading from.
Yeah.
So I am going to secure at least 20% of the profit that I have right here. Then if the price gets to TP2, I'm going to move my stop loss to TP1.
Gotcha.
Right? And as it's going, it hits TP3, I'm going to move it to TP2. Yeah. I'm going to leave that trade to ride until I see a break of market structure. What do I mean by a break of market structure? Do we see in this area, we were going up, right? Everywhere in this area, we were going up, creating a high, a low, a higher high, a low, a higher high. So we were creating higher highs, but here we began creating what? Lower lows and lower highs. It means that the trend has changed and we are coming down. So the moment that I see a trend change, which is a break of structure, then I am going to start thinking, okay, so now I need to close my trade. It means that price is going to reverse. XL move to D. All right, yes. Monty, I am going to move my XL to D once price reaches TP1. All right, we have a minute on the call. I'm going to ask everybody to exit, and then we will come back and do some markup for next week. If everybody is happy, feel free to jump out and join me back here in a minute.
Yeah, see you later.
See ya. Not back yet.